Hello everyone, welcome into Above My Pay Grade. My name is Eric. Thanks for tuning in. If you could hit that like button, hit subscribe, it really helps out the channel. Thanks a bunch. I want to take you back to 2010 when the chairman of the Joint Chiefs, the guy in charge of our national security, said this, and I quote, "The most significant threat to our national security is," any guesses? Is China? Russia? Terrorism? No, it's our debt. Chairman of the Joint Chiefs of Staff, Mike Mullen, said this back in 2010. The guy who is in charge of our national security. He said the biggest threat to our national security, way back when, was our national debt. And no one heeded that warning because our debt has ballooned out of control since then. But we'll reap the whirlwind here, unfortunately. But how are we able to take out such massive amounts of debt? It is the Federal Reserve keeping interest rates artificially low. That's correct. Reading from an article here from The Hedge. Markets for years have appreciated the Federal Reserve and the UK government as volatility suppressors. They look to them to be the adult in the room. As markets are being turbulent and there's a lot of volatility, which, by the way, happens naturally in markets because human beings are volatile. So markets can be. So they used to look at the Fed and the Bank of England and the Bank of Japan as volatility suppressors, the adult in the room, and now they're significantly or continually looking at these national banks as significant sources of unsettling instability. So they're actually the ones causing the instability. And why would they think this? We'll look back a couple of years and see what the Fed has done. And you may ask yourself after me going through this list, why does anybody look to the Federal Reserve to do anything in markets? Well, it's because they kind of have a money printer and they have a lot of power. But eventually, more and more people are losing faith in what the Federal Reserve is saying, which is fairly significant. All right, so let's go through some of these boneheaded mistakes. This is from a Twitter user, Norseman Trader. I know he's kind of famous in this market, but he kind of succinctly narrowed it down to like what the Fed has said and done in the last couple of years that would make you think, why would anybody trust these people? Okay, let's start. Boneheaded move number 1, insisting on buying trillions of dollars in assets, including mortgage-backed securities, into a supply-constrained housing market during a time of record fiscal stimulus that increased demand on housing and historic asset bubble, while purposefully targeting to run inflation above their target. Boneheaded move number 1. So, essentially, in layman's terms, the Federal Reserve increased demand on housing by buying mortgage-backed securities, while the Treasury was handing out stimulus. So people are having more money in their pockets, interest rates are incredibly low, historically low, and the Fed's buying mortgage-backed securities. So if you're wondering why the housing market went crazy, and now we have the highest interest rate rise, or the fastest interest rate rise in history, all Federal Reserve. Looking for somebody to blame them. Boneheaded move number 2. Then they engaged in a campaign of misinformation, insisting with hundreds of speeches and interviews that inflation was going to be, we all remember this, transitory. And they were completely wrong. So everyone's looking at them because they have all this market data. And they're like, okay, the Federal Reserve's going to come out with their opinion. Oh, it's transitory. Whew. Don't have to worry about inflation. Oh, it keeps going up. What? Oh, it's still transitory? Okay. Oh, it kept going up. They were wrong. Boneheaded move number 3. Then all year long, last year, they continually put out positive GDP growth forecasts. Again, they have all this market data. People are looking to the Federal Reserve, and they said, GDP is going to be 4%. We're going to have 4% growth next year. It's actually going to be 3%. My bad. We overestimate. Oh, 2%, 1%. Oh, negative. Market relies on predictability, and they're looking for that predictability from the Fed, and the Fed is continually steering them wrong. So, fool me once, shame on you. Fool me twice, shame on me kind of thing. So they were wrong about their GDP forecast. Boneheaded move number 4. In the meantime, one after another of the Federal Reserve workers started enriching themselves on insider information with no consequences and no transparency. Translation, the Federal Reserve literally has a switch, like market go up, market go down, based off the interest rates. They literally have that. And they had Federal Reserve workers, people high up in the Federal Reserve, that were insider trading off this information. Zero consequences. Zero consequences. That's right. Unbelievable. So, moral hazard much? Yes. All right. Boneheaded move. What are we on? 17. Boneheaded move number 5. Just in June, Powell said he expected 75 basis point rate hikes to not be common. Again, predictability. And now he's done 3 in a row, going on 4 again, showing nothing said can be believed or credible in the face of reality. And in 2020, Jerome Powell was saying, I'm not even thinking about raising rates. So the market went bananas. Unbelievable. And here's kind of the nail in the coffin. In 2018, right to the end of the year, they made everyone believe that they would continue raising rates in 2019. Instead, they cut them 3 times with unemployment at 3.5 and their inflation target at 2%. So if those targets are met, unemployment low, inflation at their 2% target, they should be raising rates because the economy is hot. They need to lower rates. But they pivoted. And they said they weren't going to. There was a crisis, which there actually was, and Jerome Powell was forced to pivot. So everyone's looking at all this data, right? Everyone's logical thinkers. They look at all this data. They look at the history of what the Federal Reserve is doing. And what happens when the market goes, we don't believe you anymore. We're gonna take the upside or the under on what you are saying because you have lied to us too many times. And so as Jerome Powell is saying these things about fighting inflation as their number one goal, it's their number one goal until something breaks. That's what the market is thinking. And again, market relies on stability, predictability. And if you see the market doing this, like it has been doing all year, dropping but having these massive spikes, dumps, and yada, 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 it's because we have this grossly mismanaged Federal Reserve that, in my opinion, needs to be shut down altogether. It's really wild. And ask yourself, hey, those people who were insider trading at the Fed, why didn't any of them go to jail? We live in a country of laws. One big club and you ain't in it kind of deal. So, if you don't believe, from a little guy on the internet like me, that our debt is a national security threat, maybe take it from the Joint Chiefs of Staff, Chairman Joint Chiefs of Staff Mike Mullen, and then you've got to think to yourself, how are we able to take out so much debt? The Federal Reserve, keeping interest rates artificially low. And now they're going up. Unbelievable. The amount of short-sightedness that we've had in our government the last decade. Let me know what you guys think. Should we end the Federal Reserve? I'll see you guys in the next one. Peace.